Good afternoon, everyone. Welcome. Thank you for joining us this afternoon. Welcome. My name is Taya Brown, and I'm the Administrative Coordinator here at the Temple SBDC. The Temple SBDC helps small businesses start, grow, and succeed. We do this through our no-cost consulting and a variety of our no-cost webinars and training programs like you're joining us for today. You're joining us for 2 simple questions to master understanding of your financial reports for explosive growth. We are recording today's session, and a follow-up email will be sent with to all attendees with a copy of the slide deck as well as the recording. We do encourage you to post any questions that you may have throughout the webinar in the Q&A box, and please feel free to engage in the chat. This session will be running until 1:30. We know that this time frame was set to 1, but it will be running until 1:30. If you have to jump off, don't worry. Again, the recording and slide deck will be sent to all attendees if you have to leave the webinar. But we do encourage you to stay if you can to receive all of the information live in this webinar. Now I will turn over the floor to our presenter, Sydney Warmsby.
Good morning to everyone, or I guess not knowing where everybody's calling in, I guess it could be afternoon or whatever, but my name is Sydney Wormsby. I want to thank you for sharing your time with me this morning into the afternoon. I'm going to try to make this as applicable right now as I can. So that's always my objectives when I do workshops, is to make sure people walk away with things that are very tangible, that they can do and use within their business today. When you leave this, that will start giving you some benefit and improvement in performance. And so that will be a big focus for today as well. I'm going to give a little background on myself. And I'll give you the nickel version. I have a diverse background in all areas of business. So everything from corporate exec, responsibilities and positions, entrepreneurial roles, adjunct professor roles, and then even as a speaker and author. That served me well within my career, but it also helps me to serve my clients well in my support of them. From a corporate perspective, I've had diversity also in terms of the industries and the kinds of roles that I've taken on. So I've had roles and responsibilities within every function within the business, from project engineering, in-house consulting, modeling. So whether it's cost modeling, operations modeling, operations design, manufacturing management, operations management, as well as strategy and strategic planning, to business unit management, so general management responsibilities, and product management responsibilities for startups, new market entry, global products, domestic products, or area market product responsibilities, etc. On the entrepreneurial side, everything from running a restaurant business to the consulting that I do for all types of industries here. And then on the adjunct professor side, I've taught every course within the College of Business at a couple of the City University of New York locations, Brooklyn College, as well as with Pace University here in New York City as well. So all of that really, I say, just to say I have a broad and deep understanding of business. And what I like to tell folks and really pass on is that I understand the business of business. And so what I'm going to try to do today is pass on that knowledge in the area related to financial understanding and financial management of your business, so that you can actually go out and take this information back and improve on the operations that you're working on today. Or if you're planning on startups or planning to start up a business, that you can keep in mind as you're taking on those activities as well. One of the things I like to know and understand for my planning purposes in the future is what got people here. So I'm not going to ask, with the size of the group, I'm not going to try and have everybody kind of explain, but if you wouldn't mind putting in the chat just a brief discussion about why you chose to register for this program, what it was that you were kind of piqued your interest, that you wanted to learn, and the biggest problem that you're dealing with right now within your business, and whether that's the financial management or having something to do with financial or something else. I just want to understand that so that as I'm speaking either today and giving examples, I could try to highlight some of those things, or as I'm planning in the future for other workshops, I can keep that in mind as I'm structuring and designing what I'm going to be speaking to people about. Let's talk a little bit about what we're going to cover today and what I hope you will get out of it. Again, I believe in giving people tangible things they can use today. So I'm looking to give you some very actionable strategies that you can use really in 3 areas. One, to make sure that you are collecting the correct or right information for managing your business. And 2, there's often a fear or hesitancy, a reservation about dealing with the numbers and financial reports. So what I'm looking to do today is give you a little more confidence in your ability by giving you a simple process, but also a basic understanding of what accounting is and how you should be using it within managing your business. And for those of you who are accountants or strong in your financial background, we'll be going into some depth about how do you do some financial analysis. For those who aren't very strong in the accounting or basic accounting understanding or knowledge, not to fear. I try to keep things very basic and simple to make sure folks aren't overwhelmed, et cetera. But the last thing I want to make sure we accomplish today is making sure that you're getting some info and insights about what you can do specifically, some changes you can make that are going to really explode the growth of your business. So we'll do that in a couple different ways. The topics that I'm going to cover today, I'm going to use the concept of continuous improvement for those who are familiar with manufacturing operations or those kinds of things, or Six Sigma concepts. Again, I have an engineering background, and I always use those concepts in my my problem solving. And so, one of my key attributes when I'm working with my clients is small change to big things. And that small change comes from the concept of continuous improvement, which is a cycle of activities that you do and use in terms of understanding what the opportunities are, creating plans for being able to address or take advantage of those opportunities, a process for verifying or monitoring the results that you're getting, and then putting that right back into the cycle of assessing where you are versus where you want to be. And so we'll talk and use that process here in the understanding of our financial management and our financial understanding so that we can drive performance of our business. What I'm also going to try and do is help you understand where you're at currently within your business. When we start talking about these concepts and these 2 specific, simple questions, the objective is you should be using that to understand here's where I am and versus where I want to go. But what I also want to do based on these 2 simple questions is to alleviate any fears that you have about numbers. And again, as I mentioned earlier, a lot of folks who don't feel that they're math sound, so they're starting with a base where they're uncomfortable with math, then they're going to be uncomfortable with accounting. Therefore, they're going to be uncomfortable with their financial reports. Therefore, every time your accountant gives those reports to you, you set them aside because you're afraid to look at them for not knowing what they're going to be really saying or doing or telling you. I want to try and alleviate some of those fears and help you to start analyzing your business because not doing so is actually holding you back. And I use the term strangling your business. A fundamental concept I want to make sure I get across today is you can't grow your business unless you really know your business, and you don't know your business unless you know your numbers. So knowing your numbers will allow you to grow your business. And then really focusing on misconceptions that we have about accounting, about marketing, about growing your business in general. So that's what we're going to be focusing on today. A couple of basics as we move along. One, accounting is a science. It's an applied science, but it's a science, and therefore it follows all the laws of nature. And we're going to talk about a couple of basic ones you've already heard, and then show how that applies to accounting, and therefore how you can understand everything that's going on in accounting just based on those basic laws of nature. Second, and here's a fundamental truth: accounting is nothing more than the story of the flow of money through your business. So it's just telling you where money went in, where it came in, where it went out, where it flowed through, in the course of the business activities that you're doing. So if we understand those two concepts, then everything else should be a whole lot easier for us to understand from an accounting and financial management perspective. So again, accounting is a science, follows the laws of nature. Accounting is nothing more than the story of how money flows in the business. So what do I mean by it's a science and based on science? There are three basic laws of nature that you are probably familiar with or heard in some form or fashion that I'll give some analogies from an accounting and a business perspective. One, a body at rest stays at rest. So a body at rest will stay at rest. A body in motion will stay in motion unless it's acted on by a force outside of itself. So it's going to stay in motion if it's in motion. It's going to stay at rest if it's at rest. And if it's in motion, it's going to stay in the same path, so along the same line, at the exact same speed for all time, unless it starts getting acted on by a force. So that's going to be true with our numbers as well, meaning that from a business perspective, your business is going to keep going at the same pace along the same path that it is today, unless you do something to it, unless you put a force upon the business that's going to change its direction, change its speed, or get it moving. And by opposition, if it's at rest, it's not going to start moving until you start putting a force to it as well. And that's just a basic law of science. It's going to be applied to your business, and therefore accounting takes that into effect or into account. Force equals mass times acceleration. Again, part of the laws of nature and Newton's laws of motion. And that just simply says the size of a force on the particular mass or object is going to determine how fast it acts or changes position, et cetera. So the larger the force you put on your business, the larger the action or activity, the larger the task that you are applying, the more change you're going to see. The faster it's going to move or the further it's going to move. And for every action, there's an equal and opposite reaction. And again, if I push on something, it's going to push back with the same amount of force. If I do something in accounting to one side, equal and opposite says I got to do the opposite thing on another side, or an equal thing on the opposite side. Or if I do something on one side, I need to do an opposite and equal thing on the same side. And that's the two posting kind of concept that we have in accounting. So these are basic laws of nature that are going to be applied in what gets applied in accounting that allows us to understand what's going on. Now, the other thing I said is accounting is a story of the flow of money through your business. And one of the things that psychologists and psychotherapists will tell us is that storytelling is powerful, that you can show somebody something in terms of words or numbers, but if you tell them the story, they start to live it, internalize it, and it has more impact, more power. It resonates with them greater. And I always use this example, the story of the Three Little Pigs. And so we all know the story from being kids, the story of the three little kids and the big bad wolf, and the three pigs are minding their own business, living in their houses, and a big bad wolf comes up and basically knocks each of their houses down and eats them up. Well, the concept of the accounting story within a business is understanding a couple of things. And I highlight this through a children's book that I got from my kids when they were very small, which was the true story of the Three Little Pigs as told by Alexander Wolf or A. Wolf. And it tells that same story, but from the Wolf's perspective and what was going on with that. Now, I won't, kind of blow the plot and tell the secret ending, etc. But the bottom line is everything that you thought you knew about the Three Little Pigs and what was happening with their houses is completely different and completely wrong if you're telling the story from the Wolf's perspective. If you've never read that book, even if you don't have kids, I would suggest get it, read it, even if it's for pure entertainment. But it's also good in terms of people interaction, understanding that there's always two sides to every story, and I need to look at that same situation and those same set of facts from a different perspective to get a fuller view. So, here, from an accounting perspective, we're going to say, well, first and foremost, whose story are we telling? So if accounting is the telling of the story of the flow of money, whose story is it telling? Is it telling my story as the business owner? Is it telling the customer story? And the answer here is going to be no, it's telling the business's story. What's happening to the business? And so that's important for us, to know and to understand. It's not the customer story. So it's not telling us what the customer did. It's not telling us what happened with that money when it got in the customer's hands. It is telling us what happened with that money when it came into the business, when it left the business, every department or aspect of the business, that, touched those activities or were impacted by that flow of money, et cetera. And so that's important for us to understand from a basic accounting perspective as to whose story is it telling, and who is actually telling the story. What are the financial reports that are important? There's a whole host of reports that we're going to use. I'll get into it a little bit later. But we also need to understand how do we use them once we have them. And so there are, financial reports that we get within the business that we can use for just simply documenting the activities that took place within the business. So what actually happened? And that may be a P&L report, an income statement report. That could be an asset report or balance sheet report. Or could be an expense detail report. But every one of those is going to document what happened, what actually happened, not what we planned to happen, but what actually happened. But we can also use that for analytics so that we can understand what happened. And so we can use those reports to analyze what changes occurred, when they occurred, to understand what made those changes occur. We can use all of our financial reports to forecast what will happen in the future. So if this is what's happened in the past, and if you remember one of the laws of nature that said, hey, a body at rest will stay at rest, a body in motion will stay in motion in the same path, along the same line, at the same speed, then I can forecast what's going to happen based on my reports already, unless I do what? Put another force on it that's going to make that change. I can use it for strategic planning. That will allow me to say, okay, if this is the force that's going to be necessary to make the change that I want, how am I going to incorporate that into my business? What equipment do I need to buy? When do I need to buy it? What new marketing or communication strategies do I need to put in place? Those become the things that we have to say are going to take place in order to make the force that we're looking for a reality on the business, so we can get the change in the numbers that we are looking for that business. We can use it to monitor our progress, in terms of the strategic plans that we've implemented. So I talked about in terms of continuous improvement, that one of those steps is to monitor, or verify the results that we're getting from the activities that we put in place. We can use our accounting reports, our financial reports, to actually measure, the changes that have occurred, which allows us to monitor the progress of the actions that we've taken. And last but not least, we can use it to communicate. We can use them to communicate to all of the constituencies who that information would be important or useful for. Our employees and staff, our managers, our funders or lenders or financiers. So whether there are existing funders who want to know how good we're doing, how well we're doing, with the money that they provided us up to this point, or to our future funders, those that we're making applications, to for additional funding. We will use that to communicate the successes that we've had, and the successes that we plan to have, and the successes that we planned to achieve, based on the strategic plans that we're going to implement, based on the money that they're going to provide us. So these are all of the uses that we can have for our financial reports, that are going to allow us to manage the business more effectively. And if you're not getting any financial reports, if you're a startup, and I hear this all the time, I just started up, I don't really need any reports. I know what's going on within my business, et cetera. First of all, it's not true. Second of all, you need to be setting up your business for the growth and for the future. So the question often becomes, well, then what reports should I have and are important for me to have? There are a lot of options, and I mentioned some of them before. Income statements are also called P&L statements, expense reports, cash flow reports, balance sheets, changes in capital reports, sales reports. I think I said a balance sheet. So all of these different reports are there and available. You can use them in a variety of ways to do the things that I just talked about before, whether it's the monitoring, the planning, et cetera. As a small business, there are three that are key that I make sure all of my clients get and have and use on a regular basis. That's the profit and loss statement, again, sometimes called the P&L or sometimes called an income statement, the balance sheet, and the cash flow report. If you got a business, when you file your taxes, it's going to make you create, even if you don't have one of those, it's going to make you create that by the questions on that tax return report. It won't make you create the cash flow report, but it will make you create the P&L and the balance sheet. That's just how important even the government sees that it is. So the income statement or P&L is the basic revenues, expenses, and therefore your profits. Balance sheet looks at what you own, what you owe, and your owner's equity. And cash flow is just the uses and sources of cash. How is cash coming in? How is cash going out? And therefore, what's the balance, either cash on hand or the deficit of cash, that might be flowing within the business. Now, all of these reports can be done for a point in time or a period in time or over a period of time, when we start looking at trend reports. And all of those time periods will give us different information about the business. And so it's important for us to know what we're looking at to be able to understand what we need to do with the information or what it is telling us. What story is it telling us? If we're looking at a point in time, what it won't tell us is anything about any changes. It's only telling us about right now, but that might be important for specific kinds of questions or specific kinds of actions or activities. If it's giving us over a period of time or a trend, that will give us a different set of information and understanding about the business and tell us a different story or a more detailed story about the business. So you need to be looking at, for your financial reports, one, which ones are you getting and which ones do you want to have to be able to really understand the full story of what's going on in your business so you can make adequate decisions going forward. I'm bad at looking at the chat. So I don't know if folks have asked questions. Taya, I don't know if you're monitoring still, but if you could monitor the chat and see if folks are having a question that I should kind of pause for to be able to answer. And I apologize up to this point if I've missed that for some of the folks that have already posted a question.
There's no questions at the moment.
Okay, great. Let's keep going then. So a basic financial report. A basic financial report for P&L is simply this: revenue, your cost of goods sold, gross profit as a percentage of revenue, overhead expenses, net profit, and net profit margin. Now, what are those? Let me do it this way. Revenue is nothing more than your gross revenue or your gross income that's coming in for the business. And hopefully I'm not telling you anything that you don't know already. We'll start going into a little more depth in a second. cost of goods sold are your variable costs, the cost that goes into producing whatever product or service that you have. So if you're making an automobile, then your cost of goods might be all of your chassis, your assemblies, your engine, your doors, your power windows, blah, 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 blah. All of those are your variable costs that only get consumed, only get used, only get recorded if and when you make the car. If they, aren't, being consumed or used within the production of a product or service, then it doesn't show up on any P&L report. If you are a service business, then it might be your direct labor in delivering that service. Depending on how you've set up your accounting for, your business. Gross profit is simply the revenue minus the cost of goods sold. Gross profit margin is nothing more than that gross profit divided by the revenue as a percentage of 100. Overhead costs are your fixed expenses, the things that exist regardless of whether you make 1 unit or 1,000,001 units. So if you don't make 1 unit, you're still going to have those fixed costs. That might be things like your mortgage for your plant, facility, or office, or your lease for your office. It could be overhead expenses, could be your supplies, your operating supplies. So those kinds of items that aren't necessarily consumed in the production of your product, but in the operation of your business. And they don't change with volume of your product or service. It changes only in terms of the activity of the business. Net profit is your gross profit minus your overhead. Now, here's the net. There are only 3 of these numbers in a P&L that are of any importance. That's revenue, cost of goods sold, and overhead. I can create every other number I need in my P&L from those 3 numbers. So from my perspective, I like to keep things simple. Those are the only 3 I need to look at. Now, within cost of goods sold and within overhead, I can have a million, literally, I could have a million line items to go into that, depending on how much detail I want. So I could have cost of goods sold as a one singular bulk number, or I can have a line item for my, my liquid raw materials, one for my widgets, one for my labor, my direct labor. I could have another one for acrylic powders. So I can break that up into any kind of any number of line items that I think will be useful for me in managing my business, or I could accumulate those into as few line items, down to just 1 line item, depending on how much detail I want to have for my business. So I always tell my clients, look, if you don't need to keep it by a ton of differentiation categories, then don't. We don't need a chart of accounts, for 1,500 things. If really there's no difference in one product versus the other, based on how many line items you're keeping for each of those variable costs, those raw material costs. So that's a depends answer within your business, but it can be as simple as 3 items to as many as you want to keep and maintain the level of detail that you think is critical for managing your business effectively. The same is true with overhead costs. You can have multiple categories, multiple line items within a category, or you can have a single category. That will depend on you, how large you are, how many different ways you want to look at your business, or how complex your business is. This is the basic P&L. Now, and I mentioned before that only 3 numbers I ever tell folks, you really got to focus on. So even when you have multiple line items within your cost of goods sold, your raw materials, your direct labor, et cetera, I like to have them roll that up so that they can very quickly start talking about where their business is versus where it was before. But one of the things I always want people to understand is why these numbers are important and why they're not important. So in my classes, when I teach business courses, and even when I'm working with my clients, I always ask the question around, what's the goal of your business? What's the objective of your business? Why did you get in business? Most times people talk about things that are financial related. Well, the goal of business is to make a profit. I need to feed my family. Something that's financial related. And I always answer that's not true. That's not the goal of business. And sometimes clients will look at me pretty weird when I say that, as if I don't know what's going on. But what I really want to reinforce for them is the goal of business is not to make the profit, is not to make money, is not to make sure I can feed my family. The goal of business and every business is to meet a need of a customer or a client, depending on what kind of business you're in. So the goal of the business is to meet the need of a client or a customer. The finances are important, and financial reporting and analyzing your finances are important for this reason. How well you're doing that real goal of meeting the need of your customer is going to be determined by your revenue. The better I'm meeting my goals and my objectives for my clients of serving them better, the more revenue I'm going to make. My profit is important because the more profit that I'm making, the longer I will be able to do that, because I'll have enough cash flow to continue my activities and my operation. So they, in and of themselves, is not the objective, but they are measuring and giving us an indication of how well we are doing the objective. And we need to not get that twisted and keep that in focus so that, we're not making the wrong decision. So often when people put the money first, then they can make some bad decisions for their business, trying to chase a dollar, which ultimately takes their business into a death spiral that's hard to recover from. And usually they don't recover from. So, remember that, as you're looking at your finances in general, and as you're analyzing your business, is what is it telling me about how well I'm doing my numbers? My revenues are growing, consistently growing, then it should start telling me something about what is working, what I'm doing well, and I need to start analyzing that so that I can understand how to do more of it. And if something's not working, I need to start understanding that so I can do less of it. I think I'm just in observing some time constraints here. I think I'll jump through this. So this is more than really just talking about, what do we consider in each one of those categories. I don't think there's anything that, we need to really go into any depth and detail here. If someone doesn't understand something in a specific category, let me know and I'll be happy to answer that question. But, these are the three categories that I talked about are critical and important. And the numbers that you need to focus on, and the reason that you need to focus on them. So we'll move on from there. So what are the two questions? Which is why you came to the workshop anyway. Two simple questions that I use, and I started using this, almost 30 years ago, because I'm an analytical person by nature. But it was simply this. First and foremost, is the number I'm looking at to the standard? And the second question, just as simple and straightforward, is the number that I'm looking at normal? Now, what do I mean by standard and what do I mean by normal? Here is the number that I'm looking at to the standard. The standard is subjective. It can be the plan or the goal. It can be your industry average, your benchmarking. It can be based on an industry leader. It can be based on best in class. That is something you establish for your oversight of your business. Am I looking at this number relative to what my plan was, to what my industry average is, what my industry leader does, what the best business in all of business does? I can pick any one of those and use that as my standard. There is no right, there is no wrong. It's just what are you going to use for that answer? Is the number normal? What I mean by this is it the number that I'm used to seeing? What typically occurs? What's consistent with what's happened in the past? And so I'm going to look at all of my past results and I'm going to say, this number is or it is not normal. It is or is not what I'm used to seeing or what consistently has happened in the past. Those are the two questions I'm going to ask. I'm going to ask them for every line item, and I'm going to either get a yes or a no, which makes this very simple. It's a simple question with one of two simple answers. Is the number to standard? Yes. Is the number normal? Yes. So if the answer to the question, or to both questions is yes, I leave it alone and I move on. There's nothing to see here. It's to the standard. It's what I'm used to seeing. There's nothing I need to work on. I don't need to spend any time with it. Let's move on to the next thing. But if either answer is a no, that's when I need to stop and figure out why. And then put in some corrective or changing actions. So let's take a couple examples. Let's say my cost of goods sold standard is 40%. That 40% of my revenues normally goes into or is the standard for what I want my cost of goods sold to be for my business. So that's the plan, that's the goal, 40%, boom, boom, boom. If at the end of the review or accounting period, that number is at 40%, I say, is it to the standard? Yes. If every accounting period prior to that, I had 38, 39, 40, 42, 39, 38, 41, but then I look at that 40 and I go, it's to standard. It's within the norm of what I'm seeing. It won't always be 40 because nothing is always the same number. But it's within that norm, statistically speaking, it's the same. And so from that perspective, I'd say it's good. It's the same, or good or bad. It's to standard and it's what I'm used to seeing. So nothing more I need to do. But let's take an example where, let's say it wasn't normal. Let's say my standard was 40%, but the observation for this accounting period, it was at 35%. Well, 35% is lower than the 40%. And if my cost of goods is at 35%, therefore lower than 40%, that's a positive thing. I should be happy. But when I ask the second question, is the number normal? The answer to that is no, it's not. It's not normal. It's not what I consistently see. I usually see between 38 and 42. I'm now seeing 35. So I need to stop and ask why. And often what happens when something great happens, we pat ourselves on the back, we cheer, we rah, 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 and we move on without understanding why did that occur? Was it in an accident? Was it a fluke of nature? Was there something that happened that we could make repeat and therefore always have it at 35%? Or was it truly some fluke of nature that says it will never be that good again, and don't pat myself on the back? And I used to see this when I managed business units for Pepsi and for Citigroup and other global products, for JP Morgan Chase, or global business units for Citi and market divisions for Pepsi, where some of the folks reporting to me would show some uptick in performance for a given period. And when I would ask them, they would go in and start talking about, oh, what great changes they've made in their business. And I'm looking at the numbers going, that doesn't support what they're saying. But they've just locked themselves in that says, oh, so you figured this out, then then I'm going to be expecting this same number going forward. And when it's not, they don't have an answer for that. And so you need to make sure you're understanding for your business what made that change occur, because in understanding that, I then get mastery over my business, whether it's a good improvement or a bad improvement. If it's different than what I'm used to seeing, I need to stop, analyze, figure out why. If it's normal, but it's not to standard, I also need to stop and figure out why. Yes, this is the number I'm normally seeing. And that number is much higher or better than my standard. Then why is my standard only this? What should my standard be? Maybe I need to look at who's best in class, not just who's best in my industry. Maybe I need to set a new benchmark because we're the best in class, period. And therefore, we need to start challenging ourselves to be even better. So it's two simple questions with two easy answers. that will allow you then to start going deeper and deeper into, what you need to know about your business. And, there's no complication here. There's no big science around, the two questions or a yes or no answer. The work and the revelations come from the asking and researching why. What made that number change? All right. So I use this approach with my clients to actually grow their business and to achieve my bold claim with them of doubling their profits in less than 9 months. And as I said earlier, I use that concept of small changes to big things. That I'm going to look at what small changes in behavior, in process, in procedures that they need to make in the key categories where all change and improvement comes from within the business. So if I'm going to grow my business, all of that growth will come from 5 key areas. I'm going to look at the changes that they need to make within those 5 key areas to really explode their business, results in both revenue and profits. And how I identify what those 5 key areas are, and how we do it in business in general is the basic 80-20 rule, which we've all talked about. We all use a lot of times, but that too is based on science, which comes from Pareto's law, Pareto was a 18th century economist in Italy that was supposed to be collecting tax revenues, for the royalty. And in collecting, he started identifying that 80% of the tax revenues came from 20% of the people. And he started trying to figure out, well, is that true for all other things? So he started doing a bunch of observations in other areas and found this relationship to be true. We now call it the 80-20 rule, and it still holds true because it's a basic principle that says 20% of everything that you do in a day is actually driving 80% of your revenue and profits. And I repeat that for effect. 20% of what you do today, yesterday, tomorrow in general, won't be tomorrow because you're going to start changing that today. So 20% of what you're doing today, did yesterday, the day before, is driving 80% of your profits, which means there's only a few things that you're doing literally each day that is making most of your money and most of your profits. And people always say, well, if that's true, why don't we just stop? Why don't we do the 80% of the things that, or spend 80% of our day on the things that generate 80% of our profits, and our profits will explode? Exactly. And what I get folks to start understanding and seeing is what they're spending their time on, but what they should be spending their time on. So a lot of what we do in terms of spending our time each day in the business, I call firefighting and rat killing. It's going around fighting fires. It's going around killing rats. It's things that are important, but not critical and urgent. There are things that are necessary, but maybe not necessary for me to do. And so we need to start looking at, well, what are the things that really drive business? And then how do I spend more of my time on those things? And by drive business, I mean drive business growth, and then spend more of my time on those things. So these are the 5 areas that all growth from all business comes from. And it's pretty basic. And I mean, every business, these are the 5 areas. This isn't secret. This isn't something Sydney thought up. This is every business out there. And when you start understanding just how basic a concept and principle it is, it will allow you to start looking at your business and your activities differently. So revenue is these top 4. Cost of goods sold and overhead is that last one in terms of more profits. So remember I said there's only 3 things you need to look at: revenue, cost of goods sold, and overhead. And if you look at those 3 things, you're going to know where your business is. And if you're managing those 3 things, then you're going to be driving your business at a high level and with explosive growth. Those 3 areas are broken down or divided over these 5 areas. So revenue comes from either more leads, more conversion of those leads, more transactions. So a conversion is turning somebody in from a stranger to a paying customer. More transactions is taking each one of those customers and getting them to buy more of your products or services, deepening the relationship. Higher prices comes from you having a stronger value proposition with each of those customers, so that what you're doing means more to them because it's solving or resolving a pain point that they have, and more effectively doing that than others are doing that. More profits comes from how do I drive more efficiency within the business? How do I drive more of that dollar of revenue at the top and get it to flow more prominently down to my bottom line? And so how do I reduce my cost of goods sold? How do I reduce my overhead to become more efficient? I need to change this slide because it's not about cutting cost, because you cannot cut your cost to profitability. You can't cut your cost to growth. You can be more efficient, meaning that I'm going to eliminate some inefficiencies in how I'm spending money. But I don't want people to think that, oh, I can just go cut my labor costs. I can cut, the amount of money I'm spending on my raw materials by getting cheaper raw materials, and that's not the idea of the concept here. It's about looking for efficiencies. How do I become more efficient? What's not necessary, and let me eliminate it. What's not important, and let me eliminate that, and only be spending money on the things that are important and critical for moving my business forward. So these are the 5 areas that we need to be spending more of our time on. If we're spending more of our time on these 5 areas, then what we'll actually start seeing is a higher growth. Our P&Ls, our balance sheets, our cash flow statements, all of our financial reports are giving us a picture as to what we're doing in each one of these areas, or what's the opportunity that we can have in each one of these areas. If my revenues are staying flat, I can look at how many leads. So if I'm managing my sales group, for example, I can look at how many leads they're bringing in each month. I'm looking at how many of those leads actually convert. And if I have a low percentage of those conversions, those are some of the sales reports that you might get, part of your financial reports. Then I can start seeing the inefficiencies of those and start asking myself the question, well, in this month, we had a conversion rate of 60%. Most months, we only have 30%. What was different? Oh, well, we had these 2 clients that da-da-da-da. Well, what's different about those 2 clients than all the other ones that we're looking at and talking to? Let's find more of these clients versus that client. So let's find more of these prospects or leads versus these. So it allows us to, be from the analytics of that to be more effective in the decisions that we're making, and therefore get better results for the business. Questions up to this point?
No questions at the moment.
All right. So one of the things I do with my clients is I use what I call as a simulator. The simulator is takes those 5 categories, and I can break it down into 40 different categories. I usually start with people looking at just 12 categories in a given year, just to keep the complexity down and not to overwhelm them. But it allows you to, really look at, what changes I can make in each of these, categories to be able to, get explosive growth in my business. So I've put a link to my simulator. You can get to it one of 2 ways, either this one, www.solutionswithresults.com/simulator, or you can just do /sim, S-I-M. Either one of them will get you to a version of my simulator. What you can do there is start looking at each of these 12 strategic areas and just looking at, well, if I made a 1% change, if I made a 5% change, if I made a 10% change in one area or in all areas, what impact would that have on my business? And one of the things that you will see is how an explosive and extraordinary transformation you can make in your business by making very small incremental improvements in these key areas. And what's important about each of these, and I really make this clear with my clients going in, that their behavior changes, that their procedure changes, that their process changes, so they don't cost you any money. And that's one of the things I really focus with my clients on in terms of strategy, is I'm not coming in there to tell them, you need to buy new equipment, you need to buy, this, you need to spend money in this area. I'm trying to help them see how much is still in their control. That look, you change the way you do something, that cost you no money, your growth is now all under your control. Now, at some point, I can spend money when I know what I'm doing and why I'm doing it and the results that it's going to achieve for me. That will help me ramp it up. It'll help me scale faster. It will help me to scale to bigger, but it doesn't stop me from growing right now without having an extra dime or in my pocket. It doesn't require me to have extra money so I can go spend it on marketing advertising. It doesn't require me to wait until I'm profitable to be able to do these things, because they're just about process changes or behavior changes. And that's important for you to understand, and things that, again, looking at your financial reports will help you to identify where are these things, where am I, kind of missing out? Is it in my cost of goods sold? That I'm having high expenses. Let me look at each of these categories. Let me see what I need to do. Can I talk with a vendor, to change, when they're bringing supplies in that will reduce my expenses or my cash outlays? Can I, get a different material from them that has the same properties, but is a less expensive one because it's sold typically in a different industry? There are just all kinds of things that I can do that cost me no money, whether it's on fixed goods or fixed expenses or variable expenses, that will allow me to drive more profit to the bottom line. And there are lots of things on the revenue side that will, I don't need to do marketing in terms of paid pay-per-click ads with Facebook or on Instagram, et cetera. There are things that I can do in my, networking and interactions with individuals, or in my messaging on my website, or on my Instagram page, that will allow me to attract folks in a more effective way to drive folks, to my business. The result is always going to be explosive growth in your revenue and explosive growth in your profits. All right. I think I will have time here to answer a few questions that folks have. Let me just check time real quick. Yeah. So I have some time to answer questions that folks have about either the information, or if you brought your own P&Ls, questions that you have that you're experiencing right now, or your P&Ls or financial reports that you're experiencing right now that you'd like to get some insight or understanding about in terms of solving problems for your business. No questions? All right.
If
Well,
you have any questions, please feel free to put them in the Q&A or chat box.
here's one question. For a service-based business, what's the best way to find a break-even point? Whether it's service-based or a product-based, break-even is always calculated the exact same. So the calculation doesn't change. It's the trick is to make sure you're including the right items within your cost of goods sold or your variable cost. And so with a service business, what you really have to look at is what's going into each of your client actions or transactions. And so as an example, I'm a bank and I've got a teller. A teller, cost may be going into operations activity, but it's not going into revenue generation. And so I may consider that a fixed expense rather than a variable expense. My salesperson, on the platform, is the one who's actually contacting folks, trying to get them to buy a investment or some insurance, or for a loan application, et cetera. Their labor would go into variable expense, but only some of their labor, because remember, some of their labor is going to be used for operations activities, like helping a client manage their account or answering a question, et cetera, et cetera. So the real trick in service businesses is in what are you including in the variable cost. The calculation in and of itself for break even is going to be the same, though, no matter what kind of business that you're in. And hopefully that answered the question.
And then there is another question in the Q&A box.
Before that one or after that one?
After, I can read it out if you would like.
Okay, go
It's
ahead.
not in the chat, it's in the Q&A.
Okay.
This question is, what is a good early point to present to investors? What investors are looking for in early stage product development with sales under 10K units?
Okay. So what was the first part of that question? What's
a good early report to present to investors?
Okay. All right. So depending on where you are in startup, will determine what kind of investor you're going to. First and foremost, I do a workshop on overcoming funding objectives, or funding obstacles. And that I talk about, what are funders looking for, and therefore how do you present information to them, et cetera. Most traditional lenders are only looking for what's generally called a paper. You got to be in business more than 2 years. You got to, have high profit margins, blah, 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 blah. There are lots of ways and lots of places to go to get money. If you're talking about an investor, like an angel investor, they're going to be looking for pro formas that are based off of your what's called an MVP, or minimum viable product. So some model or mock-up of what you're going to be doing as the business itself, and what kind of revenues and profit you're generating from that scaled down model. And what you're looking to do there is show the performance capability, and how, if you had money, you can scale up. So typically there, you're going to be talking about P&Ls. The P&L is going to show what your revenue has been. You'll use some sales reports, which will include things like, how many prospects and leads that you generated, how you were converting those. You'll provide some demographics about those folks, et cetera, in your marketing plan. But in providing those sales details, it's going to give them an idea of the size of the market that you have access to, for the product or service that you're providing. And then they're going to use your current P&L to be able to look at and say, if they're getting that kind of revenue right now with this kind of process and system, what are they likely to get if I start giving them this money? But what are they going to spend it on? And so in addition to the report, you need to have the business plan that says, here's what I'm going to be doing. And so I was working with one of my clients recently who's acquiring a farm and then going to expand that farm. And the same conversation, with her around, it's not just about having the pro forma. Anybody can make up some numbers. And not that she was making up numbers, but it's like, anybody can put a number together for a report. What you got to show is, here's what my plan is, and here's how I'm going to spend that money, and here's how I know that that's going to drive these numbers that I have, and how you can be assured of that, so that that lender gets comfortable with the risk that's going to be associated with the outlay of capital. So typically it's going to be a P&L report, sales, some sales information or market survey report, research report that will talk about the size of that market, and therefore what share that you're going to get if you had the money to do these kinds of marketing activities. Did that fully answer the question, or is there a follow-up addendum to that?
The second part was what investors are looking for in early stage product development and sales under 10K units.
Yeah.
Yeah.
So again, I'll go to non-traditional investors, because banks are not going to look at anyone who's less than 2 years. And if you're under 10, I don't know if you were talking about $10,000 or 10,000 units. If you're under $10,000, or if you're considering yourself basically a startup, typically a bank is not going to be looking at you. They're looking for, do you have an MVP already that you're doing some revenue for? And typically that's going to be over $1 million. So non-traditional, they're going to be looking at what's the biggest question is going to be, what's the security for this loan? if they are an alternative lender, they might look at that security being you as a guarantor, which you never want to do as the business owner, because you want to, just like they want you on the hook, you don't want to be on the hook. And so you're looking for other ways to avoid that. They will look for assets. Do you have some assets that I can use? Inventory, depending on what kind of business that you're in, that they can look to. So, besides a traditional loan of give me a bunch of capital, I'm going to go invest it in my business. The easiest loans to get approved are things like merchant fee loans or credit card loans. Basically, you're getting advanced cash on credit card sales and the credit card sales history that you have. Inventory loans, where you're getting a cash advance on the conversion of your inventory into product or services. So all you're really doing is shifting when you're getting the money. You're getting the money earlier than you would later on when your sales process is done. And so unless you have our track history already of some revenue, most lenders aren't going to be giving you a whole lot of money. That's just where things are at this point. And so you've got to create an operating process with data through your P&Ls and some of those expense reports to be able to demonstrate when you go into a meeting, here's what I've been able to do with nothing, with no help, with no support. But here's what I can do if I've got this kind of funding input or this kind of capital outlay. And you can follow up with me later. I can answer some of the questions in more detail about, so if I understand more about your 10,000 units, maybe a little more about your specific situation. But generally speaking, that's what you're going to have to show. You're going to have to show that I've already done some things with the business having no revenue, having no capital access, and I'm already showing a profit. But to scale this up, I need this kind of money, and I'm going to use my P&L to be able to demonstrate that to them.
And that's all the questions at the moment.
Okay. All right. Let's do this. I'll give you some of my contact info. If you want to get in contact with me about specific questions about your business, about your P&L, the financial reports that you have or using, or that the questions or concerns that you have, feel free to reach out to me. Those are my two websites. The solutionswithresults.com is my general business website. Solutionswithresultsacademy.com is my library of tools, templates, and training that I provide for clients on a subscription basis, or for all of my clients if they're a coaching client of mine. And you can email me at one of those two or both of those email addresses, sydneyw@solutionswithresults.com or swerm_22@yahoo.com. And then my phone number is there as well. I don't know if there are accountants that are on the call today, but or the workshop today, but if you are and you're trying to figure out, hey, how can I create an introductory offer? I've worked with some accounting partners before, giving them some packages that they can offer startup businesses or for early revenue businesses that might be coming to you or that you interact with, that they need something, but they're just gun shy because they don't have a lot of excess money within their bank accounts. You can give me a call and I can give you some ideas about how you can package those to be of a benefit to them. And if you are one of those startup businesses, you can give me a call about the same thing, and I can tell you how to communicate with a bookkeeper or accountant to be able to try and get those package of reports now rather than waiting for when you're bigger. And it gets much more cumbersome to try and kind of weed through all of the details that you have and all the papers that you've accumulated over the years now that you're doing more revenues, and now it's a hassle. So you can contact me and give me a call and I can help you with that. But for those who are on, I'd also like to just offer, again, as a thank you for attending, a couple of different things. One, I normally do a profit growth consultation where I will look at for a business 3 of the growth strategies that I talked about out of the 12. Or I will look at the 12. The 12, I usually charge about 2,100. For the 3, I usually charge 497. For just coming in and spending your time and sharing your time with me today, I'm willing to offer that for free for anyone that registers today, because I don't want to have to try and you come to me a week from now and say, I was at your meeting before and that. I don't want to go through, looking at, who was on the list and who wasn't on the list and all that kind of stuff. So if you book today on a meeting with me I'll get a notification today about it. I will give you that free consultation. Even if you're booking the consultation for a week from today, if you book it today, I'll give it to you for free. The other is for those who are interested in a financial mastery mastermind. I have a group that I run on 3 days. It's an 8-week session. It's going through understanding your financial reports, analyzing your financial reports, working to actually drive revenue increases and enhancements as well as profitability. And it's a combination of both training and kind of group support. So, I'm providing some training and education and information, and then working with peers within this group and me, looking at your or giving you insights or feedback on your financial reports or things that you can do or try. It's giving you ideas of things that you should be or could be doing in your business to improve your business. It runs over 8 sessions, which is 1 session per week. So it's over 8 weeks. And I'm offering that at $497. Now that's usually a lot higher because the $497, as I said earlier, I normally charge for just the profit growth consultation, which I'm throwing in with that for free. And the 8 weeks worth of group training sessions is usually 2 times the $497, so $994. So it's a pretty good value for $497, but it's a way for you if you're not comfortable or confident about your finances or trying to get information about how to better manage or improve your financial performance for your business. It's a great way to start at a fairly low investment and therefore high value to figure out and determine where you need to go next. So you can use any of those links. Actually, let me see if I can copy and put that in the whoa. That wasn't a good thing. So I guess maybe I can't do that. I was going to try and see if I could copy that and put it in the link. I mean, in the chat, but maybe I can't. We'll see. But anyway, so the Tuesday, Thursday, and Saturday ones are weekly. And those are different time frames that I do them based on, some people are on the West Coast, some people are on the East Coast, some people are, over in Europe. So I set them so that, folks can attend no matter where they're coming from. And I'm adding one that's going to be on a single day. A couple of people have asked for that in the past. I've not done it, so I'm doing that one as a test. That's going to be a 1-day, 6-hour, but I'm doing that at almost half the price, $297, just to see if that is of benefit or interest for folks. So if you're interested in any of that kind of financial performance work, a group is a great way to start with that. And again, at fairly good value. So either one of those you can sign up for, again, the consultation free using that link for my calendar. The mastermind groups using these links to go ahead directly and to register for those. And once you register for those, I'll send you out information on the link for the sessions. Each of those sessions are also recorded. So if you can't make every session, then you can have the recording to be able to review and get the information that you missed. Any other questions?
I'm not seeing any other questions.
All right, I did put those in the chat. They're a little bit jumbled, but Well, again, I appreciate everyone spending their time today. Hopefully you got something out of it. I saw a couple of messages in the chat that said they were a little less anxious about their financial reports at this point. So hopefully you got something out of it. Look forward to hearing from any of you going forward and ways that I might be able to help you, or other information that you think would be useful in the future. And I know that Taya will be sending out some survey reports. So any information you can put in there that would help me improve the information that I'm including in my workshops in the future, or things to cover less of or things to cover more of. Happy to hear that, or any other topics that you would like to be covered in the future, would be useful for me to know and hear as well. So thank you very much.
Thank you everyone for attending. There was a survey posted in the chat. If you didn't catch it in the chat, all of this information will be shared in the follow-up email that will be sent shortly. It is required by our funders to engage with the feedback. That way we can continue to provide no-cost webinars like the one you attended today. This information will all be shared in the follow-up email with the slide deck, recording, and survey. Again, if you have any questions, please feel free to contact the SBDC. And thank you everyone for joining today. And thank you, Sydney, for presenting.
Thank you. Enjoyed it.
Have a great afternoon, everyone. Bye.
All right, bye-bye now.